All right, let's jump right in. The document set we're working from is dated January 31st, 2026, and the single most important number shaping the entire environment right now is this one. 50%. That's the staggering tariff rate now slapped on most of India's exports to the US, thanks to actions taken back in 2025. You can see how this creates a massive external pressure point, and really a fundamental tension right at the heart of the strategic landscape. And this external friction, it has a direct internal consequence. The documents show that foreign investors yanked a stunning 36,000 crore rupees from Indian equities just in January. And the sources are crystal clear. They link that caution directly to these tariff threats. So all of this, it brings us to the one theme, the golden thread that really ties this entire briefing together: execution risk. See, the challenge right now isn't just about having a good strategy. It's about actually turning those plans into reality when you're caught in this clash between huge new opportunities on one side and some very real, very active constraints on the other. Bottom line, success now is all about navigating this complexity, not waiting for the storm to pass. All right, with that framework in mind, now we turn to 3 key developments. Okay, first up, we have this collision course between U.S. trade policy and India's export strategy. And that 50% tariff, it's not just one big levy. It's actually a 2-part structure. You've got a 25% reciprocal tariff and then another 25% penalty tariff stacked on top, both hitting in August of 2025. The stakes here are frankly enormous. This creates immediate, unpredictable costs, and it directly fuels that investor caution we just talked about. So for our anchor and twist analogy, think of it like this. The anchor is this wide-open 4-lane highway for supply chain diversification, that whole China Plus One opportunity. But the twist? The U.S. just built a massive 50% toll booth right at the on-ramp. So what should you be watching? The documents point to one thing: any movement on the delayed India-U.S. trade deal. That's what's tied directly to investor risk appetite. Bottom line, trade policy isn't just background noise anymore. It's an active daily variable in your corporate planning and in capital flows. Okay, our second development, it's a huge step forward, but on a totally different trade front. And this number, $33.5 billion, is right at the center of it. We're talking about the India-EU Free Trade Agreement, which the sources say is officially set for implementation in 2026. And the key word here is immediacy. That $33.5 billion worth of goods, it goes to 0% duty on day one. That's an incredible boost for labor-intensive sectors and a huge signal of confidence for investors. So for the anchor and twist, this is like moving past the blueprint phase. We're at the groundbreaking ceremony, and the steel beams for day one are already stacked up on site. The thing to watch is simply the operationalization, making it all happen within this calendar year, 2026. Bottom line, a major trade relationship is shifting from just talk to full-on operational readiness, with big, quantified benefits right out of the gate. Now for our third development, we see risk moving from the abstract right into the commercial space. The documents lay out a disturbing plot that's been linked to the Red Fort attack in November 2025. And this timeline here, it shows just how fast things escalated, from a single piece of propaganda to a full-blown national investigation. But here's the real kicker. The alleged plot wasn't targeting a government building or a military base. It was a plan to bomb outlets of a global coffee chain in major Indian cities. The stakes here couldn't be higher. It's a fundamental shift in the security calculus for any consumer-facing business. The anchor and twist is this. It's like realizing your building's fire alarm can't just listen for accidental smoke anymore. Now it has to watch for a specific arsonist who has the blueprints and is targeting your lobby. What to watch? The ongoing probe by the National Investigation Agency is key. Bottom line, the target set for terrorism as described in these documents now explicitly includes civilian commercial spots in the heart of major cities. Okay, so those are the big events. Now we turn to 4 systemic shifts. These are the undercurrents moving just beneath the daily headlines. First, let's look at business and markets. You have this really interesting dynamic. On one hand, a major structural green light. SEBI giving the no-objection certificate for the National Stock Exchange's IPO. But it's happening at the exact same moment as that massive foreign capital outflow we talked about. The next step is a draft prospectus within 3 months, but that headwind is very, very real. Next, in technology. The driver here is a huge government push to scale up AI infrastructure, and the forward implication is just massive.
We're talking about private AI infra investments potentially doubling from last year's $70 billion by the end of fiscal year 26. That's an incredible acceleration in the pace of capital buildout.
Then we have law and regulation. And what's interesting here is that it's the courts that are actively stepping in and imposing new operational standards. They're creating brand new, enforceable compliance rules for everyone, from police forces to private schools. These are mandates that you just can't ignore. And finally, in climate and energy, the EU's Carbon Border Adjustment Mechanism, or CBAM, has changed the game. It means climate policy is no longer separate. It's now a direct trade issue. For Indian exporters, particularly in the steel sector, this means real market access risk if they can't show a clear shift to low-carbon production. Bottom line, these 4 systemic shifts reveal deep, structural changes in markets, tech, regulation, and trade, and they're reshaping the entire competitive landscape as we speak. All right, keeping those larger shifts in mind, now we turn to early signals, things that are just appearing on the radar. The documents point to 2 signals worth monitoring. First, there are really strong expectations of an industrial policy reset in the upcoming February 1st budget, things like simpler rules and lower compliance costs for manufacturers. Second, there's a defined pathway to finally resolving that financial market friction with the EU. And the key here is that both of these are on a very clear, very near-term timeline. Bottom line, these aren't law just yet, but they are strong signals pointing to tangible relief on both industrial policy and financial market access. Coming soon. Okay, let's pull all these threads together. Now we turn to the final synthesis. So, let's tie this all back to our golden thread, execution risk. What's changed? Well, clear pathways to execution are definitely opening up. The EU trade deal is happening. The NSE listing has a green light. But what persists? Those powerful external headwinds. The US tariff friction, the investor caution that comes with it, none of that has gone away. And that's the crucial takeaway here. Your strategy can no longer afford to wait for a clear field. It has to be designed from the ground up for execution in this high-tension environment. And that brings us to the final essential question for you and your teams. With these very real opportunities now in motion, how do you need to reassess your strategy to actively navigate these persistent, powerful risks? Bottom line, the central leadership challenge has shifted. It's no longer about just finding the opportunity. It's about having the plan to execute on it successfully right in the middle of all these crosscurrents.